All right, let me know when you guys can hear me. Check 1, 2. Figured we'd get a little early start. Got a lot of new folks in the room. So if you are new to Theo, welcome. We are going to be talking about some index futures for the next hour and 10 minutes. Specifically, a strategy that I teach here with the NQ, the NASDAQ E-mini. Brian Aponte posted the link to my class. So if you're interested in understanding more, just scroll down to the links that Brian posted. I believe he posted the class. He posted a happy hour that I did as well. And we'll be going over a few charts and a few things in here. If you see something that you like, I share everything. So I will be more than happy to provide it to you. All of my charts that you see are available on the shared page. I'll show you where that is real quick. So right here, you just have to go and scroll down to where you see my name. And then you will see the things that I share. I'm a sharer. I like to share. Massimo, let me see if you're asking me. All right. I don't think that's a question for me. I'm not sure how to answer that. I believe that trades are pushed to text versus email. All right. So real quick, we're going to go over kind of, just take a look around. Take a look around and see kind of what we're doing today. It's very quiet tape. Very quiet tape. And just go over some overall price action as it relates to some of the longer time frames. Kind of give you guys an idea of how I look at the markets. I look at the markets a lot different than most traders and really honestly than most instructors here at Theo. You can see on your screen I don't have any indicators. I don't use indicators. I use just pure price action, bar for bar analysis based on 2-minute charts. Okay, so everything I do is based on the 2-minute chart, and it's based on reading price via the 2-minute bars and around my levels. Okay, so let's start with the longest time frame, that being the daily chart, and we will take a look at our daily chart here, and we can see that, man, we have a lot of stuff just bunched up here. Right? And for my NQ and ES traders, let me know if you got the weekly pivots that were posted. I did also post a monthly pivot. I don't know if you saw those. I believe that they're both very much worth putting on your chart. For instance, if all you did in the month of May is bought the monthly pivot for NQ, you made a lot of money. Okay? These pivots are very important to trade. Now, when I say that, I don't mean on an intraday basis. And I don't swing trade. I don't hold these overnight. But we watch these levels because they are in play in our regular trading session. And the logic behind a weekly pivot is that it's a formula. It's calculated by taking the high plus the lows, or the high plus the low plus the close, right? Easy for me to say, divided by 3. Of the previous week. So if you were going to, calculate this yourself, you go to your weekly chart. This is where the monthly pivot was for May, by the way. You go to your weekly chart. This was last week, right? So you just simply look up top here and you see the high, the low, and the close. You take those 3, add them together, divide it by 3. That gives you your weekly pivot. Same thing for the monthly pivot. All right, and I don't talk about the monthly pivot a lot. Well, because it's every month. So you got to take it to a month chart and do the same thing. You take the previous month, look at that. For everyone that's bared up, and that's a pretty bullish looking chart right there. You take the same thing. So here is the month of May. high plus low plus close, divide by 3, gives you the monthly pivot for June. Okay, and we'll just keep doing that. I do provide these levels every week in the chat room. One second here. In the chat room, either Sunday night or Monday morning, right? And why? Why am I even looking at a daily chart if I'm an intraday trader? Because a pattern is a pattern is a pattern. If we are bullish on the longer time frame, guess what? We're probably ultimately going higher, right? So we want to, obviously, we don't want to create bias in our heads, but we certainly want to respect price on the longer time frame if we're trading these markets intraday. We don't need to think about certain things that would lead us to making decisions. We simply want to confirm them and validate the trade setup based on how we trade this, all right? So I'm going to take it one more. This is the hourly chart. This is also something that we keep an eye on during the day as an intraday trader. What is going on the hourly chart? What do you see here? Mario. I do. Not rose-colored glasses, but dotted lines. Yeah, Massimo, there are no dumb questions. Anyone that's new, hey, ask away. We're open book. We're going to tell you. We share a lot of stuff here, like a lot of stuff. Sam says up. So a little more than that. All I see are higher lows and higher highs. That's essentially what the answer I was looking for, Sam, is higher lows and higher highs. We have to respect that. Again, it's on a longer time frame. So how do we actually utilize that information? We want to keep in mind that the market has potential to go higher. So maybe all we want to do is buy pullbacks. So as music was playing, I was walking some traders through an actual setup here, and I basically posted that if you bought the 96, it only owes you the 9600. So take some risk out of the trade there and go even stop. If you had done that, right, you avoided all of this. All right, so now that's my segue into actually my strategy. So we're going to go over to the big chart for NQ. We're going to go over to the big chart on NQ, and we're going to talk about some setups that we've seen throughout the day, and maybe something will set up. It's a very quiet tape. Maybe something will set up here for us to trade, and I can give you guys some examples of how this stuff actually works. Yes, Brett. Sometimes it is. Sometimes skydiving is more fulfilling than trading. All right, so let me find where our market is. So anytime you open a chart, you can't quite find where price is, you can always right click and do that auto zoom. Find out where you're at. So, gap fill. Imagine that. Shocker. All right. Big gap down last night in the Globex trade in the overnight session, and they filled the gap. And that's probably why we are just marching higher. All right, so what you see on your screen, a bunch of lines like, dude, no one told me I was going to need sunglasses for a session, okay? I've heard it all before, believe me. So what I want you to key in on here is a couple things, and I'm going to go ahead and highlight this stuff. So what I'm showing you right now is the roundies and the 50s. Okay? So what am I talking about? Like, man, you've lost me right out of the gate. And I get it. There's a lot to take in. I kind of do, I do come with a little disclaimer. Okay? No, Jeff, you're good. I come with a disclaimer. I do kind of have my own lingo. But essentially, I'm going to try to articulate this as clear as I can. We're focused on the 100 handles of price. So from the 9,600 to the 9,500, right? Those are big round levels, right? We can all agree on that. They're my, gravity points, if you will, if you've been listening to any of Don's stuff. There's another one in the middle of the 100 handle block, and that's the 50 right here. Those are considered inflection points. What is an inflection point? It's like a pivot. And what it tells us on the longer time frame, very simply put, is that if the 50 is converted, see, the 95.50 here, if the 50 is converted to support, we're going to the next big round level on the chart. That's the 9,600. That's what we did. That is what we did. So that's all well and good to have that knowledge, right? To have that knowledge, what do I do with it? Like, okay, cool, dude. You told me it's going to 9,600. What do I do with that, right? So I've taken the guesswork out of it for you. And what we are doing, what you see on your screen is within this 100 handles of price, 95 to 96, there are 10 of these gold levels that make up the 100 handle block. These are levels that we use as entries, okay, to get involved. So if we have subscribed to the notion that the 50 is good and we're going to the 9,600, here's how we would apply a trade to that. We would either apply a trade to it here at 56, right? Identifying risk by saying or by looking at price and utilizing these dashed blue lines. So in other words, the way that this sets up is if we're going from 56 to 66, this level is going to remain support. Does that make sense? So in other words, we put our entire position on at 56 and we take a portion of profit, or take a portion of the trade off for profit into this area here. Obviously, there's some resistance here, right? And then we simply protect the balance of the trade, and we call that a runner. Okay, we call it a runner. So again, keeping the big picture in mind, Tony said we're going to 9,600. So what are you doing? You're just holding it until it gives you a reason to let it go. So from your entry, higher lows, higher lows, higher lows, higher lows, higher lows, right? Okay. So let's say that, well, I missed it, dude. I didn't buy it. I didn't believe you. I don't know what you're even talking about. Okay. Well, here's another opportunity to try it, right? It doesn't mean the trade is gone. There is 50 handles or 50 points of a move here. You don't have to buy it here and sell it there, right? We can capture a big part of the move by buying the 66. So let's talk about how these trades actually set up. I'm going to talk about this one in particular because I think this is important, and this is part of the strategy. So again, when we're talking about trade setups, how do we know that we're going to go from one level to the next? I'm going to show you. Okay, very, very simple, basic stuff when it comes to trading levels in this manner. Now, it's worth noting that the entire 100 handle block is a big support and resistance table, right? What do I mean by that? That if we're testing this from above, it should be support. If it's not, you can see how price moves through it, then we're relying on this as support. And so as it comes back through here, what would this be? Resistance, right? And if we break through it, this is resistance. If we hop over it, it turns to support. This is resistance. If we hop over it, it turns to support. This is resistance. If this is support and we keep going, right, you can see what I'm talking about. Now, when we're talking about this stuff in the futures room, I point out key things that occur on the chart. And the main thing that occurred on this chart right here, well, let me make that a little bigger. Dude, come on. You see this little bar right here? Now, it's important to note that it came from this spot, right? So from the 56, this bar right here, remember, keep in mind, this is for new folks. I don't look at indicators. I look at price, right? Price. And I utilize my levels. Believe me, there is a method to the madness here, okay? So from the 56, I have a bar close. Right here, this bar closed at 63. So what does that tell me? That tells me the 66 is open, right? And I post that in the room. So if I say to you, the 66 is open, how do we apply a trade to that? Pretty simple stuff. We buy the 56 against the 52, targeting the 66. And that's how we go from spot to spot. Okay? Likewise, from this 66, what do we have? A broken marker. We know the 77's open. Right? And so for those that have been following my stuff for any amount of time, I would then tell you one thing. If you have a runner, whether from here or here, notice this. Why is price continuing to test this level from below? No, Jeff, it has to be the entire bar. Wicks equal tests of levels, but it has to be a bar close above. Like here, for instance, coming from here, the level held. This is where it broke, right here. Wants to go higher, right? So Mike got it. It wants through. Persistence beats resistance. Remember, we're talking about this turning into support and this turning into support. All this was in the morning was resistance, right? So you can kind of grasp the logic of this chart just by simply looking at how we were range bound between these spots. Why was this resistance and why was this support? Every time, right? So we were just channeling here, right? And again, all we're trying to do is go with price. Fighting price never pays anybody. It just takes money away from you. And the market is not here to just give you money. So we have to work for this stuff. All right? Yes. So an open spot. So for instance, here this opens the 66. So right away, you would say to yourself, Sam, the 56 is open. Well, we don't just dive in and buy the 62 to go get the 66 because we don't use these dashed blue lines as entries. But what we do know is that as it comes into the 56, that's an entry for us, right? So we buy the 56 on this bar coming back, right? It's just a pullback to a level. And as it tests the 52, we're going to have to take a little risk sometimes. There's going to be heat on some of these trades. Sometimes we have beautiful trades that do not give us any heat whatsoever. Right? We get long 56, bam, we're 66. Now, the reason I'm focusing on this particular situation is because you look for this type of stuff in the chart. This is the kind of stuff that really gets you into a trade. It validates the setup. It gives you a logical target. So this is a setup that tells you to buy 56 versus 52, right? You have a backstop here, that 50. Remember that 50? Look at all those tests that are holding. Okay? And you have a logical target. So what I've done for you is I've given you areas of entry, and they never change, by the way. These levels simply repeat themselves for every 100 handles. And we'll get into that in a few minutes. So we know, if you've been trading my levels for any amount of time, that the 95.56 acts just like the 92.56, the 93.56, the 91.56, the 51.56. It's all the same. And this is just my way of isolating the levels that are in play within each of these 100 handle blocks and simply wrapping an actual trade application around it. What is the most important part of trading intraday is one thing and one thing only. And Professor Bierman pounds the table on this. So what is the most important thing before entering any trade? Sandra got it. Risk. Dylan got it. Right? So we have to be able to identify risk in the trade. And it's all well and good. It's all well and good to say that, risk is 52. But if you don't respect risk, the market's going to eat your lunch. Bottom line. Right? So that's what I've done for you. If you are buying into my methodology, and again, like I said when I came on, this is my way of doing it, right? There's other ways to do this. I need that. I get my level. I can identify risk. As long as the bars hold and there's no close below, I stay in the trade. I anticipate resistance up here, and I will take profit when the market decides to pay me, right? If anyone comes in and say, hey, here's $5, do you want it? Yeah, thank you. You took the risk, get paid. Logical target being the open spot. It's no longer open now, right? So I'm back to was it Sam that was asking? Yeah. So Sam, this is for Sam P. How do we open the 56 again? Or no, I take that back. The 66. How do we open the 66 after it's been tested? So it was open here. It's no longer open here. How would we open the 66 again? I am taking you to task, sir. You guys are bored. You're saying that we're now making marine animal formations in price. That's awesome. Stephen, pray. $9.15 bar. The only way, I'm going to answer it for you. The only way we can open the 66 and classify it as open is coming from the 77. It's the only way. So once it's you use the term closed, I just call it fulfilled. Once this open spot is fulfilled, meaning it's no longer open, the only way that you can open the 66 again is coming from the 77 and breaking the 72. Did we have a light bulb moment? Did we have a light bulb moment? We should have. Because this is going to tell you something. Kenneth, you got it. Yes, Jeff, I will. Just give me 1 second. Boom, right? You got me. So if you are long 66 or if you're still long 56, this logic applies to the runner. So you have the balance of the trade. You can clearly see that price is doing higher lows. And then in the back of your mind, remember what you have in the back of your mind, right? Besides your brain. Well, if 95.50 is good, we're going to the roundie. I've got 50 more points above here. 50 more handles above is the roundie, right? So that gives you overall market direction or trend. Well, what makes it so? Man, we're going over some good stuff here. What makes it so is no broken markers. If you ain't breaking markers, you're going higher. So if you're long 56 here, right, it never threatened your runner because the 62 held. If you're long 66, never threatens your runner, never breaks the 72 and opens the 66 where you're hanging out long. Right? Now you can start to see how the pattern starts to materialize. And I'm going to tell you something right now. The 56 to 77, the 66 to 88, this is stuff that we do all day, every day. In the futures room. This is the stuff that we point out. We live for this stuff, right? And that's just the long trade, right? There's short trades in this tape as well. So we're not just unidirectional traders. We're not just all perma-bulled up saying, oh, we're just going to keep going to 10,000. We trade every setup on this chart for the most part, right? The bottom line is, what I need you to understand is we don't fight price. Trade less and make more. Get in a runner and let it work. Does that make sense? Am I talking over anyone's head? I would love to make sure that I'm not losing any of the new folks because I know that could happen. I know that could happen. I told you I come with a disclaimer. And Jeff, I got you. 1 second. I'll show you. 1 second. No. 88 is already tested. The only way to open an 88 is from a 96 or from a 77. 88's tested. So right now, we're either going to come from the 88 and close a bar above this marker and head to the 96, or we're going to lose the 82 and head to the 77. I will tell you that the 77 is open. It was left open right there. And we traded around this. It's only, we'll go get 77 if we can get a bar close below this 88, in my opinion. All right, perfect. Todd, I'm glad you said that. So Todd said, I'm going to have to change up my game and allow for runners. I've been all or nothing. Let's talk about that because what he's talking about is scalping. So in other words, Todd might have done a 56 to 66 and declared victory. Hey, high five, bam. There's nothing wrong with that trade. That's a good trade. However, now you have no position, right? So now you have to try to get long because you don't want to fight price, right? You have to try to find a way long. Wow, they didn't let me in. So now you look at this and go, I'm just going to short this. Look left. Be careful. Persistence beats resistance. So there's a few moving parts to this, but by and large, the tape does exactly what it's supposed to do around these levels if you respect risk and price action. So Jeff's asking about bar closes from above or from below. So let's talk about that. So a very vanilla explanation of my strategy is this right here. What is that? Jeff, this is for Jeff M. One second, Tony. Excellent, Mike. Love to hear that. Full scalps are great too. Don't get me wrong. Yes, Rick, we left the 77 open. We'll go over that in a second. I knew this was going to be a good session to really kind of drill down on some of this stuff because we have so many new folks. So you're asking about, Jeff, you're asking about define tests from above and tests from below. We know we use spots as entries, right? So this would be a place to enter your trade, short, because it's a test from below, right? We anticipate this being resistance. And I'll give you the science, the Rego science behind this. But that's essentially what we're doing, right? So if we're selling the 66, can we identify risk? Yes, it's with the 72, right? It's not a hard stop. We're simply watching price. So as the 66 falls away, we take profit. Now, this particular scenario, we would have made money in this bar and it would have stopped us out if you're using my methodology, right? What is this right here? This is a test from above, right? What does that represent, Jeff? That's a long, right? And so let's say you missed it. Remember that bar? This gives you indication that we are going to, in fact, go back to the 66. How do we go there? How do we get there? If price gives us another opportunity to buy the 56, we'll buy it to go get the 66. Does that make sense? Regina, you could do that. You could, trade it in that way. I like to just have offers. Like we're using these levels to identify targets. In other words, a spot to spot trade. Okay. But if you feel like, maybe the market's about to dump out or, whatever indication you're getting from something you're looking at, then yeah, protect it if you want. When I go even stop, I just go even stop. And Tony, right here is the opportunity. So when this bar closes, if it closes below 88, yes, you would sell the 88 to go get the 77. You got to let the bar close first. I do not do that, Dylan. I do not do that. I do not remove the stop or move it around. Once I have an even stop, I don't do that. Here, let's see. Let's see what happens here. We'll try it. We'll try it. The 77 is open right here. From the 88, that's actually a broken marker. Nah, it's not going to let us in. So what we can do is if price is not going to let us in the 88, I mean, this bar hasn't closed yet, but if it's not going to let us in the 88, what do you want to do with the 77? We can buy that level, right? I do not, Sam. I don't utilize these levels as entries. If you're utilizing a risk marker for an entry, so in other words, if you buy the 82 long here, it's actually against the 72. Right? Because that is what supports, that's the next marker supporting your long trade. Does that make sense? Remember, the method to the madness is identifying risk from a spot. So if you're trying to identify risk from a dashed blue line, a risk marker, it's the nearest marker that supports your trade setup. So if you're buying, then that's your marker. So we're offering 88 up here to see if we can get short, to go get 77. It's going to be a test from below. We're using the 92 as a marker, if it lets us in. Always spots. I would go as far as to recommend, if you're really going to do this, put a sticky note on the monitor that you use for trading. It says trade spots only. When you try to finesse in these risk zones and outside of this stuff, it gets a little weird. Okay? We always wait the first 15 minutes out, Jeff. We let a range establish, and then we will start to trade after that. Especially on a Monday morning, and that's a great question. So Jeff asked, did you trade the chop this morning, or did you wait for price to set up? And look, I mean, if we're going to sit here and do this, there's no entry. So by using spots as entries, it has kind of a twofold, right? You're going to limit the number of times you trade. You have to wait for price to come to you. So if this thing just dumps out without us, well, we'll just wait for the other side of the trade. We might get it though. It might happen. It might not work. I don't know. I don't know if it's going to work. We'll see though. Playoffs. So as price reaches up, I'm sitting here offered. So I'm sitting here saying, hey, I'm willing to sell 2 contracts at 88. Boom, we're short 88. Let's see if we can get a +5 out of this. We're ultimately targeting the 77, right? So we want to take risk out of the trade. And the only way we can do that is when price comes back in, we take profit. Now, I don't know if we'll get 83. We should. If we have 77, if we're going to get 77, then we should be able to get this paid. Get paid, rather. You can do it. Come on. Is there a good time to trade? The first few hours of the market are the best time for the NQ and the ES, in my opinion. The further we get into the day, the trickier it kind of gets. So see, we're bidding. We're waiting for it down here. As a matter of fact, let's stick to our normal plan. Let's just make sure we can get some risk out. So we're going to front run that. We're going to take a +4 if we can at 84. Yeah, this tape wants higher ultimately, in my opinion. But as long as these lower highs hold, we should be okay. Remember what the setup is. We're risking 4, right? We don't want to see it close above 92. So we're risking 4 handles to make 11 total, or 11 on the runner. Lower highs holding so far. It's a very quiet market. I don't like shorting quiet markets, by the way. I hate it. But we'll hang out as long as the 92 holds. Oh, I'm trading a micro. All right. Even better, actually. because I don't know where this thing's going. It should come down. I mean, the price pattern says, let's go. So we recognize that the spot's open here, right? But we only go to actually make a play out of it or apply a trade to it when we get this setup right here. We could just stay here and just stick to this 88. So I want to see a lower low, and then that we'll get it if that's the case. I was hoping this would be quicker because I have more to talk to you about. But I figured the best way to just talk through this stuff is to show it to you. And what better way to show it to you than live, right? You're like, oh my God. But this is what we do in the futures room. We do this together all day. And then that's going to be my segue into the next part of this. And it's like, why do we do this? What's our why? Why are we doing this every day? Are we crazy? Are we silly? No. This is what we do for a living. This is how we make our money, right? And so we don't just willy-nilly try to trade the entire tape. We put a plan together, right? So every trader in the futures room, I encourage them to put a trading plan together, okay? That means if you're doing this as a business, okay, then you should have a plan. I don't like these higher lows, by the way. This thing should fall out of bed, but it's not yet. So see where this bar closes. Yeah, this thing is, it's looking for the shorts, and it's not wanting to pay them. Look at that. That's a higher high. Yeah, Jeff, I use this Trade of 8 Dome for and the Thinkorswim chart. So now we're taking heat. Now our marker's being tested, and that's a higher high. All these lower highs, I was leaning against them. So if this breaks our marker, we're going to have to find our way out of this trade. So this 92 has to hold it here. This market just has a perpetual bid under it. It's just really, it's incredible. It is incredible. Yeah, I know. And we'll have to flip long to go get that. But, you know. So 92's got to hold it in. And right now, it has nothing to do with the heat that we're taking. All right, so now we're taking too much heat. Now this is just too much heat now, right? So what we want to see here is we want to see this close back below 92. But the trade doesn't feel great, okay? So if we wanted to scratch the trade, we just put our order in to scratch it to see if it could come back to 88 to let us out for even. But it looks like it's about to break our marker. So remember, the original setup was risking 4 to make 11. If this marker breaks, we have to take a -4 if we can. It's incredible, Peter. Incredible. And I mean, it's not up to us to decide why or question it. All right, marker's broken. So we want to put our order in right here to get out. That's our original marker, right? We were risking 4. Our marker's broken. Now we need to get out of this trade. This might be a disaster stop, actually. So we're long. Damn it. That's up here. Would be our disaster stop up here. Whoops. I just covered one. Dang it. I screwed that up. So I only have one left. And my disaster stop's up here. I keep, sometimes I even screw up that right click. I didn't mean to cover one. I meant to get them all out here at the 92. Trade of 8 is a little different. It has a right click. So now, look, we're looking at price together. So how are we going to get to the 92? There's a lot of tests of 96. If the 96 is resistance, we're coming back here. Right? Yeah, Randall, I see it. So I'm always, no matter what, I'm always going to try this trade. No matter what. So I'm kind of glad we're doing this on micros. And we'll try to flip the other way if we can. Yeah, I floundered that. Thank you, Sandra. All right, so we're out. Anytime you're trading, always make sure that you reach up here and exit all positions, right? So how did this provide our exit, our escape hatch, if you will? Because our marker broke here, right? We wanted to see it back test the 92. That was our original marker. It doesn't always owe us an out at even. Now this thing looks like it wants higher. Channel, all of my charts are on the shared page. But I'll be more than glad to share this with you if you want. Let me get the charts here. We're going to have to get long here in a second. Jesus. Okay, so this. There's the NQ. And that's the ES chart. All right, so let's watch this for a bar close above 96. If it closes above 96, we'll get long. This is tricky because it's an inflection point here. But price is price. So the reason I say a bar close above is because this will give us an indication that we're heading here, right? So let's try it. Let's try to get long 96. So we're long 96 now. Feel like we're chasing it a little. We know that this roundy up here is really all it owes us. Yeah, I hate buying this. And then we might chase our tail here. But we got a lot of tests here, so we should get through. So we're offering one of the contracts at the roundy, right? Because we want to see if we can go get the roundy. The 92 has to hold here. I could just be chasing my tail, by the way. This might not want to go anywhere. It might want to go back to 77. This might be Wild Toad's ride here. This gave me an indication we're at least going to the 02. That's what that gave me an indication of. Don needs to turn the machines back on. And this is what I mean about late in the day, we get some sloppy price action. It gets really sloppy. Or as Don calls it, a slop fest. And that's what's happening here. But we know that we lost some handles, so we'd like to get those back. And we're just stuck. Today. So we're taking a little heat. We're coming back into our entry. We need to see a higher high right here. So as we come into the 96, I want to see some 98s. And then we should be able to get a roundy here. There's a couple ways we can trade this, okay? We can go take risk out, which I want to do that with you, especially if you're new. We didn't get the opportunity to do that on the last trade, right? We were short and it didn't work. So price wants to go up. If we're going to continue to test these levels, we're going to go higher. We've got an open 06 up here. So ideally, if the higher lows can hold here, this is where we're going. Don needs to turn the machines back on for us, though. So give us a higher high. Let's go. And we're sitting up here at the roundy offered for a +4. I think we're actually going to do better than that, but I just want to stick to the script here. This is, oh God, this is so quiet. This is so quiet. There's a higher high. Let's go. It's got to go. It's just stuck. Prices, God bless. Now, it hasn't given us a reason to scratch the trade just yet, but I'm about to because of the inflection point. I don't want this going resistance and we're going to the 50, right? So it's got to get going here. We need this bar to close above this 96. We need to fulfill at least a roundy test. I know. And they make everyone nervous, Sandra. I'm about to take this off because I don't like it. But, you know, it hasn't given us a reason to yet. It's lacking buyers. We are lacking buyers in this market right here. The only reason we're trying this is because the 06 is open. Otherwise, we would just simply hang out and let the roundy get a test. I've seen enough. I want out of this. I'm just going to take this off. Now, this could work. This could be glorious, but I don't like that. I don't like how we're just meandering here, and it's going to go without us if it goes. I'm cool to hang out here. The last time we did this, it failed miserably. So I'm just going to wait. Let's get back to our discussion. I was hoping I could show you guys an actual trade, but the market's just too quiet. So we were willing to try this here, right? We're willing to try this here. Our marker broke. And I floundered it up here, but we got the balance of the trade off here, right? So the way that this would have worked is we would have taken both contracts off at 92, right here. Remember, we were risking 4 to make 11. The lower highs got busted. And now here we are just doing nothing. Everything's flat. And there are times when you have to just do the audible like we just did. And just say, you know what, let's just take it off. There's no reason to take the heat. Flat is also a position. For those that were wondering, that is the Trade of 8 dome. So it's just like the active trader. It's just like having our dome here, right? But I use Trade of 8 because they are our broker partner for the futures room. So let's talk about the futures room for about 3 minutes or so. And we'll just continue to watch price here. So in the futures room, you have, it's basically a mentor type of setting with Corey and I. I come on in the morning, and again, price action's much better in the morning. It gets kind of like this in the afternoon. So I come in the morning, we're on the mic, or I'm on the mic from 6 a.m. to 8:30 a.m. for the most part. And then Corey does a session as well, and then I will come back on. But what we are doing is all things futures, okay? And a lot of us utilize the Trade of 8 dome and the Trade of 8 deal because Don was able to get them to provide a flat fee for commission-free trading, and that's $199. So that link, when you click on it, it's $199 to be part of that deal, okay? What you get as part of that is not only commission-free trading, but you get the mentor aspect of 2 instructors in the futures room calling out live trades all day long. We trade pretty much all day long. Now, when I tell you that, that doesn't mean you have to trade all day long. Remember what I said earlier. We all trade with a plan in mind. Well, that plan should not say, hey, let's trade all day long, right? No, that plan is let's grab what we need out of this market. And the baseline for that, and I'm bummed that we weren't able to get into a trade here. We will tomorrow, so stick around if you're new. The baseline for that is 20 handles a day. Okay, so 20 points a day is mainly what we're looking for out of this market. That's the baseline. Depending on your skill level as a trader, that number could fluctuate between 20, 50, and 100, just depending on what kind of trader you are, what kind of account you have. But for the most part, new traders that are learning something new, they don't have huge accounts to trade with, to deal with, a lot of risk and all of that, right? So my job and Corey's job is to help you execute your trading day, your plan for the day. So if your plan is, it calls for 20 handles, well, we're going to look at the tape and we're going to go try to find that 20 handles. And that's what we do every day. Every day. Every day. Right? And why is it 20? Tony, this thing, you just said it was going to go to the 50 to the roundy. That's 50 handles. Correct. So all we need is 20 of it, right? All we need is 20 of it. And so if you're one of those traders that is only looking for 20 handles a day, then I might tell you, hey, Sam, there's your plus 20. You're done for the day. And then you simply book the day, put a big check next to the day, and you get ready for the following day. And we just rinse, repeat all day long. Does that make sense? It is very hard to trade the last hour, the last 2 hours, and especially in a tape that's just, the volume is super low. I don't have a bar close below that, and I wasn't buying the 77 blindly because of the 88. So now the 96 is open again, right? I'll try it one more time. So 96 is open again. Let's see if it'll give us another look. We got 10 more minutes. I'll try it. Actually, I won't. You know why? Because we might have a few questions. So let's use this last 10 minutes as some Q&A. Yeah, and so Vic, those things kind of creep into our mind. Vic said the 06 is open, but I'm worried that they might pull the bid like last Thursday, right? Just understand what we're doing here, okay? Understand what we're doing here. And I agree with where your head is, Vic, because we're trying to squeeze out, like this is the high of the day. So we're trying to eke out, the last part of the day. I'd rather have like a running start to go get it. So I'd rather have lower prices. But clearly they didn't want us to short it to go get it. We couldn't even get risk out of the short. And that spot's still open, by the way. It's probably going to go get it. So Todd, when the market does this is like kind of a rug pull where, right, the 77 bid was pulled all the way down to the 50. They just kind of like seemingly looking like a bunch of buyers here, and all of a sudden they leave the building and the market drops. That's essentially what he's saying. But he's also looking back and thinking about a previous experience, which has nothing to do with the setup here. And that's the constant battle in our heads, right, that we do every day. Every day. We always, if we have battle scars in this market, we're always looking over our shoulder regardless of the position. That's just human nature, right? It's just part of it. It's like putting your hand on the burner. It burns. But we really have to compartmentalize that stuff and say, hey, my marker's 92. All right? And the reason I took that trade off is because it felt like that was about to happen. And there's no reason to hang out here and just to get out even here. Let's just take it off even here and be wrong. We're too close to the highs and price is not following through. That makes sense? It's a tricky day and it's Monday. It's Monday. So we don't want to try crazy aggressive trades on a Monday. If we don't have a market to trade, if it's not a very good setup, it's choppy or whatever it is, we can wait till tomorrow. We don't have to be trading at this time of day. I was hoping to just provide an example, but no. Yes, Sam, we actually on the shared page, one of our other members put together the code for Ninja. So if you're using Ninja charts, you can go over to the shared page and there's code in Ninja on the shared page rather that will show you how to install my charts on Ninja. If you're using another broker, if you're outside of the US and you're using Interactive Broker, you're going to have to build the chart yourself. And if you want to send me an email, support at Theo Trade, I'll show you how to do that. All right, now 88 just opened. From the 96, bar close below 92. We're probably going to go get the 77 now. But who knows? Let's take a look around real quick before I hand you guys over to Corey to take you into the close. Here's what we look like on the hourly, just kind of melting up. Not a lot happening. Here's what we look like on the daily. Matching highs. Actually, I think we breached. Yeah, so we breached previous day's highs. It was a doji inside day all day. So we did make a higher high versus, but look at this. Look at this little complex of price here. Talk about indecision around a big, big, big level. And oh, by the way, we're less than 200 handles away from the all-time high. So go ahead and add that to the head scratcher of this, that is this market. Like, what? Wait a second. I just looked outside. There's murder hornets, viruses, and riots. Wait, we're going to new highs? What? Crazy stuff, right? Market can remain irrational much longer than you can remain solvent. All right, so here is the ES. This is definitely the driver of all price. All boats lift and come in with ES. So if the ES really wants to hold weekly pivot on a Monday, you have to respect that. And they are not as close to their all-time highs as the NASDAQ is, okay? So this could still have some room to run. All right, so respect that. Let's see what we look like on the hourly for NQ here real quick. Tech is just super strong. I don't really know what's driving it, but pretty much all tech is up right now. So we still have, what do we have? We still have higher lows and higher highs on the hourly chart. But it's just, it's not setting up very well on our intraday charts. We just kind of triangle out, and then we try to get going to the downside, and that bid shows up, and it's just a little tricky. A little tricky. So I hope this has been helpful, okay? Kind of a introduction to how I look at markets. And I will tell you, again, I'm the only one that does look at markets this way, good or bad. Corey's going to come on, and he'll let you know how he does it as well. And we will kind of go from there. If you have interest in the futures room or anything futures, please shoot me an email, support@TheoTrade, put it to my attention. If you're having a hard time installing or opening my charts, you know, sometimes when you open my charts, they'll look like this. Like, hey, where's price? Just scroll left. Okay, sometimes price axis does some funky stuff and it starts piling on bars. But you should see the levels when you open the charts, okay? If you are looking to trade micros, I did put together 2 grids for you to do that. I do not have, hang with me one second. Hopefully this shows up right. The NQ did. I do not have micro charts specifically for the micro contract. What I have and what I just shared with you is this. So it's basically the spot chart. You got to change it to a 15-minute or a 2-minute if it opens that way. I don't think it will. But you got to, so this is the chart you trade. So just like we were using the DOM for Tradeovate, you're just using the micro NQ active trader. So you're just mimicking what it would look like if you were trading the mini. You're using the price chart over here, and you're using the DOM here to execute on the micros. All right, those are the links I just shared as well. Page not found. What page? Wait. Hang on. Let me post these separate then. They ran into each other. That has an ES behind it. Sorry. So that's the NQ. Here's the ES. Sorry about that. I knew I was in trouble when I tried to put them back to back. And then there's the ES. It didn't give you a link, but you'll have to cut and paste that anyway. And then when you paste it into open shared items, you use Control V. Okay? And what's important here is that you understand you're on the micros and you're using the mini chart. All right. All right. So I hope everyone has a great night. I hope this has been a good intro into my strategy and how I trade using just price action, just pure price action. It wasn't very fruitful for our first time together if this is the first time seeing me, but we didn't get our heads lopped off or anything like that. We will get back on this tomorrow. Maybe we'll have a better tape at this time of day tomorrow. I will be on at that time. Until then, again, I hope this was helpful. Please shoot me an email if you have any questions. Everyone have a fantastic night.